everyone. Thank you so much for joining us today. My name is Soka Yus. I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. And today we're going to talk about Student Loans 101. So this is to cover the very basics of student loans. So at any time, if you have any questions throughout the presentation or afterwards, please just, throughout the presentation, please just send a message through through chat on YouTube, or if you have a very specific question for yourself, just send me an email afterwards and I'll be more than happy to get back to you. So again, today we're covering Student Loans 101. This is my contact information. Again, I'm a financial wellness counselor here. This is my direct phone number and also my email address. If you can't write it down now, you can always go to our website at mayocreditunion.org and go to the financial education section of it. My contact information will be on there as well. So what's on the agenda today? We're going to talk about how to pay for college. So paying for college, we're going to talk about FAFSA, the Federal Student Aid, how to identify your loans, understand your loan repayment options, and prepare for repayments. So paying for college, what are some of our options to pay for college? So we have the College Savings Plan, which is the 529B plan. That's available here at Mayo as well, at MEFCU, but also it's available at the Mayo Clinic benefits as well. So you might want to reach out to your HR or your benefits person with Fidelity to see if you can sign up for that. Or you can just sign up at any institutions as well. Just look up the 529 College Savings Plan. And also student loans. You can always get student loans and apply for student loans for private and for federal student loans. And there's scholarships available as well with the Mayo Clinic and also with MEFCU here. We usually release information on scholarships with us, usually around September, August or September, and you have to apply by November time. So we're going to talk about, we'll talk more about, how to pay for college here in a little bit too, so a little bit more in detail. But another way to pay for college, that we're going to talk about the federal student loans, the federal student aid, FAFSA. So before each year of college, students can apply for federal grants, work study, and loans with a free application for federal student aid, which is what FAFSA stands for. Your college uses FAFSA data to determine your federal eligibility. So who qualifies for FAFSA? Pretty much anyone who applied qualifies to a certain extent. So some of the basic eligibility, you have to demonstrate financial need for need-based federal student aid programs. You have to be a U.S. citizen or an eligible non-citizen. You must have a valid Social Security number with the exception of students from the Republic of Marshall Islands, Federal States of Micronesia, and the Republic of Palau. You have to be enrolled or accepted for enrollment as a regular student in an eligible degree or certificate program. You also have to maintain a satisfactory academic progress in college or career school. You also have to provide consent and approval to have your federal tax information transferred to the FAFSA form if you're applying for aid between July 1st, 2024 to June 30th, 2025. And then all you have to do after that is sign a certification and then show that you are qualified to obtain a college or career school education. So the best time to sign up, when to sign up for it, each academic year, the deadline for FAFSA remains relatively similar. The application opens on October 1st and closes on June 30th. So it's always best that you get your application as soon as possible. So you would find this application on studentaid.gov. So it has a lot of information on FAFSA, a lot of information on student loans on there. So we'll cover like the very basics with this presentation, but if you go to studentaid.gov and if you have any questions about that, please feel free to reach out to me and we can work together with that too. But with FAFSA, it's a quick application. It's really simple to fill out. So if you need help with that, please let me know as well. And how to sign up. So you would sign up with, log into FAFSA.gov to apply online. So it's FAFSA, and you can complete the FAFSA PDF. You must print it out and mail the FAFSA PDF for processing. So that's how you would sign up for that, or go to studentaid.gov and there's a special section for that as well. So how to successfully repay your student loans. So you have to identify your loans. We're going to talk about that. Prepare for repayment, understand repayment options, and learn about the Public Service Loan Forgiveness Program, which is available for the Mayo. The Mayo Clinic participate in that. So identifying your loans, you have your your federal and private student loans. You can go to studentaid.gov, put in your information and see who your student loan provider is, or if you don't have access to that, you can just create an account to get access to that, or you can log into your credit report to annualcreditreport.com, and it'll show you your student loan servicer on there too. So, and then you will be able to reach out to them, and they can help you identify what kind of loans do you have. Do you have federal, do you have subsidized loans, unsubsidized loans, or private student loans? And then you'll be able to determine, are your loans eligible for the Public Service Loan Forgiveness Program, which you can go to studentaid.gov and go to the forgiveness section of it, forgiveness and cancellation. So when it comes to subsidized loans, the Education Department, what that means is the Education Department pays for the interest only while you're enrolled, and about 6 months grace afterwards. So what that looks like is if you take out a loan for, this is an example here, $3,980, your interest doesn't start accruing until 6 months after you graduate, or you stop enrolling in that school, or when you graduate. So it'll pretty much stay the same size until roughly 6 months afterwards. So unsubsidized is graduate or professional degrees and has higher loan amounts. So this is an example of that, what that would look like. So if you take a loan out for $4,481, pretty much stays the same until you graduate. But also unsubsidized loans, remember the interest accrues the moment that you get dispersed. So the moment, the very next day when you get a disbursement of those funds, just remember that the interest accrues as well. Understanding the repayment options, so you can do the standard repayment option, which is repaid in 10 years. So that's just a standard. If you're not, if you're just making your regular monthly payments back, then you should put you back on a standard repayment plan to have it paid off in 10 years. The graduated repayment program, the payments increases over time, and the extended repayment program's repaid over 25 years. So the income-based payments are calculated based on income and family size. So some of the repayments programs that are under the income base is the pay as you earn. So the revised pay as you earn, the income base, income contingent, and the new SAFE program that Biden rolled out late last year. So when it comes to private student loans, this means it's, so here at MEFCU, we do have private student loans available through Lenke. So that's, this is under our policies and regulations, or excuse me, with Lenke as well. So it's not government backed. So it means that you pay the institution back. So lenders policy, it's based off lenders policies and regulations. The cosigner may be required if you don't have enough credit or if you don't have enough income. The cosigner released after meeting all requirements. So if you are able to keep up with all your payments, for the next year or so after you start repaying back, and if you want to release your cosigner, you can do that depending on what the policies and regulations of that private lender require. So an example, wondering what different loan amounts and repayment types could look like for you. So for example, if you take out student loans, a $37,000 student loans, the standard repayments, the monthly payment will be $394. The total interest paid is $10,000. If you apply for the graduated standard repayment, it'll be $222. The extended repayments will be the lowest, so it's over 25 years, so that would be $216. The repay program would be $350 with interest paid of $12,000. And also, if you choose to consolidate your loan with us with Lenke or with MEFCU through Lenke, your monthly payment would be $303, and the total interest paid of $17,418. So there's always, other programs out there available too. If you think that you need to consolidate your loans, you can talk to a loan officer. You can talk to me to see what is the best option for you. So for the standard repayments, the 120 payments over 10 years, and then the graduated standard repayment increases by 20% every 2 years. So that's why the interest paid is hard to calculate for that one. The extended repayment plan, it's 300 payments over 25 years. The repay plan is 140 payments over 11 and a half years. And our repayment plan is 180 payments over 15 years. So this is what it will look like if your loan is roughly $50,000, which is about average right now across the U.S. So your monthly payments for the standard repayment plan would be $530. So it would be 120 repayment plans or 120 payments over 10 years. The graduated standard plan will be $300, and then the extended repayment will be $292. The repay program will be $350, and the income-based program will be $524. And then our plan would be $409 for monthly payments. Okay, so understanding repayment options. So once you determine your federal, under federal consolidation, you can consolidate your subsidized and unsubsidized loans under one. You can also consolidate it into private consolidation loans to consolidate both federal and private loans into one, and with a repayment term of 5 years, 10 years, 15 years. So consider multiple options and terms. So for example, if you consolidate your federal student loans into a private student loan, remember you're forfeiting a lot of the available benefits of having private federal student loans. For example, like the forbearance that was going on for about 3 years there. So just remember, review your pros and cons before you consolidate your loans together. So for the pros of private consolidation, you can manage fewer loans. As we know, student loans is not just one loan. You can consolidate, all your student loans under one loan, and then you make that one payment, saving you a lot of, headache to see, just to make sure that you have one, big loan to pay out to instead of several little loans. You can save money with lower interest rate as well, so you can shop around for interest rate. You can improve your cash flow with lower payments. So if your payments are lower, your interest rate is lower, then you have more cash in your pocket to put towards other financial goals as well. You can release your co-signers sooner too. So the cons of consolidation, you forfeit benefits provided by federal student loans. So just be sure to review your pros and cons before you do that. So what happens if you can't afford your loan repayments? You can still ask, even though there is that 3-year forbearance, you can still ask them to go back into forbearance. Just remember that your interest will continue to accrue. So you can postpone your payments. Interest accrues, continue to accrue, which can cause loan balance to increase, even though you don't have a balance due right now, a payment due, but you remember your loan will increase because the interest will continue to grow. You can make changes in expenses or lifestyle to better afford your student loan payments. So I do a lot of budgeting with our members. So if you don't think that you can afford your student loans or you need help trying to find extra money, where to find your, so that we can pay towards your student loans, you can reach out to me. We can put together a budgeting system for you that works for your lifestyle, so that we can afford to pay back your student loans. So the pandemic forbearance, there was the CARES Act, the forbearance and interest pause effective March 2020. It was an executive order signed by President Trump and President Biden. Repayment did begin in October 2023, but then they rolled out the SAVE program, which we'll talk a little bit more about here too. So some of the frequently asked questions: should I consolidate or refinance my student loans? Well, consolidation may not be the right choice for all borrowers, depending on the current rates, the types of loans that you have, and the co-signer release. So if you feel like your credit is in the right place, if you feel like you are making enough money to afford your own repayment plan, and if you need to release your co-signer sooner, then maybe consolidation into private student loans might be better for you. What is the best way to pay off student loans faster? Well, there's no repayments penalty to pay it off a lot sooner. Refinancing student loans can lower your interest rate, saving you more money. That way, those extra money you can put towards your student loans. You can make extra payments to reduce your principal balance and save money on the interest. So if you did have private student loans before and the interest was a little bit higher, then you can always refinance it to a lower interest rate, so that way you can save more money on the interest or use that extra money to pay towards the principal of the balance. What if I cannot afford my payments? You can enroll in the income-driven repayment program or the SAVE program, or there are multiple different ways. You can get a second job or pick up some extra overtime. You can cut back on certain things in your lifestyle to help you, cut back or have some extra money. How long does it take to pay off student loans? The standard repayment is typically 10 years, so 120 payments. Can I deduct student loan interest for taxes? Yes, you could qualify to deduct up to $2,500 of student loan interest per return year. You can claim the student loan interest tax deduction as an adjustment to income. You do not need to itemize deductions to claim this. How do I remove student loans co-signer? You can refinance or do a consolidation to private student loans. How do I know who to pay and when to pay my federal student loans. You can pull up your credit report or visit studentaid.gov. Again, the credit report is my annualcreditreport.com. It's all free. Do student loans affect my credit score? Yes, your student loan amount and payment history will go on your credit report. On-time payments will help you maintain a positive score. Failure to make payments can hurt your score. But again, before it gets to the point where you fail to make your payments, please reach out to your student loan servicer, let them know of your financial hardship. I'm sure they can put you on some sort of forbearance, and then you can go from there. So just reach out to them and let them know what's going on with, financially, just so they know what kind of program you might be qualified for. Can a creditor ask me about the alimony, child support, or separate maintenance payments that I or my co-signer receive? A creditor can ask whether income stated in your application comes from alimony, child support, or separate maintenance payments. However, the creditor must tell you that you do not have to reveal such income if you do not want to be considered. What is the Biden SAVE plan? So as we're aware now, we've all heard about what's going on with the SAVE program. So with student loans, this realm is constantly changing. So that's how we're trying to cover the very basic, which is the Student Loans 101 with this presentation. It's ever changing, so we'll do more presentations throughout the year. I know there's gonna be a change in the SAVE program summer of this year, so we're thinking, I think it's next month in July is when it's gonna change. But to give you the rundown of the basics of the Biden SAVE plan, so SAVE stands for Saving on a Valuable Education Program. It's the newest income-driven repayment program that calculates your monthly payment amount based on your income and family size. The SAVE plan is an income-driven repayment plan, so it's based off your monthly payment on your income and family size, but it's your discretionary funds. It increased your adjusted gross income from discretionary fund based off of 150% to 225%. So it lowers payments for almost all borrowers compared to other income-driven repayment plan because your payments are based on a smaller portion of your adjusted gross income. The SAVE program has an interest benefit, so interest as in the interest rate. So if you make your full payments, monthly payment, but it's not enough to cover the accrued monthly interest, the government covers the rest of the interest that accrued that month. This means that the SAVE program prevents your balance from growing due to unpaid interest. Okay, and the SAVE plan gives borrowers who originally borrowed $12,000 or less forgiveness after a few years, as few as 10 years. And more elements of SAVE program will go into effect this summer 2024, will lower payments even more for borrowers with undergraduate loans. And it does not, when you fill out the application, it doesn't include, you don't have to include your spouse's income on there as well. So I think they only ask like 5 or 6 questions when you apply for the SAVE program. So if you're a little nervous signing that up or, going to sign that up, but you can, try to apply for it, but you don't always have to, you don't have to click accept on it. So if the payment plan is higher than what you expect, you don't have to accept the payment plan that's offered, but you can still fill it out though, just to see how much you might be qualified for. So there's more to come on the SAVE program, but there's way more to come with student loans as well. It's, again, it's ever changing. Oh, sure, yeah.
So this person asks online, what if I do advanced payments? Will it still affect my credit score if I pay 2 months in advance and then I do not pay the next month?
Oh, so that's a really good question because sometimes people want to add extra into their student loan payments thinking that, I paid an extra, I made a double payment for this month, so next month if you don't think that, I don't have enough money to make my student loans payment, but I think it should cover that month amount, then you should be okay. But just remember that with student loan servicers, there's going to be different regulations, so you might want to reach out to them. So if you have Nelnet, reach out to Nelnet and give them that example. Usually, if you do pay extra, it usually covers, let's say if you pay 2 months ahead, then it'll give you a due date that's due in a couple months. But it might not be the same for every student loan servicer, so just reach out to them to see if they accept that. If you make extra payments for this month and you're going to be out of the country or whatever for the next 3 months, will that extra payment for this month cover for the next 3 months or just to make sure? So if it's private student loans, then remember it's based off their policies and regulations as well, so you might want to reach out to your student loan servicer. Any more questions online? Okay. Again, if you have any more questions on student loans, again, this is the very basic of what we cover this time for this presentation. If you have any specific questions, when it comes to, I find that when I do student loan presentations, the more basic we cover, the better, because I feel like the more people have a lot of very specific questions about their personal student loans, so it's hard to cover what some of the, some of the main concerns are. But I mean, some of the main concerns is like, how do I repay it? What to do if I cannot repay it? So those are some of the main concerns. But if you have personal questions about your loans specifically, you can reach out to your student loan servicer. You can reach out to me. We can work on it together. Or if you don't know if you qualify for the Public Service Loan Forgiveness Program, we can try to apply for that too. If you need help with that, we can talk more about that. So it's, student loans is very personal. It's more personalized. So I get a lot of questions and a lot of meetings when it comes to student loans too. So don't be afraid to, don't be shy. Don't be afraid to reach out to me, after the presentation or whenever you have time to ask about your personal student loan questions. But again, you can reach out. You can look up more student loan information on our website at mayocreditunion.org. And this, again, is my contact information, my phone number, and my email address. So please reach out to me if you have any questions about that. So we'll go ahead and probably do another one by later this year when things are more updated. So I know, like I mentioned earlier, the SAFE program is going to have an update in summer 2024. So we're waiting for that update, and then we'll do another one later in the year. So if we don't have any more questions, we'll go ahead and wrap it up here. So thank you so much for joining us today. And again, my name is Soka Yus with Mayo Employees Federal Credit Union. I'm a financial wellness counselor.